Right, we're live, day 396. Today we're looking at a few more properties under 200 grand that are in the Birmingham market that recently came on the market. So just to let you know what I'm filtered on. I'm on Redfin. I'm on filtered on 4 bedroom plus single family homes, and I've been on the Redfin page for less than 3 days. So I'm only looking at fresh listings. And why am I doing this? All right. So if you're pursuing the BRRRR strategy, BRRRR, which stands for buy, rehab, rent, refinance, repeat. The whole point of the strategy is for you to be able to recycle your capital back faster. So let's say you are able to buy a home for $40,000. You renovate that home for $30,000. So you're all in right now for 70 grand. And you're able to get a property to be worth $100,000. Well, in that scenario, what happens? Okay. Now you're able to go get a debt service coverage ratio loan. Let's say you can get a loan for about 70% of what your after the repair value is. Well, that allows you to get back $70,000 in the form of a loan. So it's a loan, so it's not taxable. It's proceeds from a loan. So you're essentially getting back the 70 grand you invested to rinse and repeat all over again, right? You get the same 70 grand and you can use it to buy another property. That's why the strategy is so popular, because of the fact that you can scale a lot faster without having to do a 20% down, buy a property, save again for the 20% down. That could take a lot of work if you're solely relying on W-2 income only, okay? Now, if you remember correctly, I've been looking at properties for quite a while, and I have a whole spreadsheet of all the properties that's been on the market or sold in the last year. I've also have a separate list of just by zip code what's been coming onto the market lately, so I can keep on top of what is happening in the market. And ultimately, this property is in 35023, so I'm going to put this in right here. Let's see. Oh, there it is. Copy and paste the address. This property is listed for 209,900. It's a 4.2, right? 4.2, 1579 square feet. 1579 square feet. This was built in 1960. 1960. This is being listed for 209,900. That makes the dollar per square foot based on the asking price divided by square footage of 133. Listed on 10/30/24. This is 0.41 acres. So I'm always comparing apples to apples. No garage, no basement, no HOA, right? Let me double check. Yeah, no garage. This is a carport. So when I look at the property, I can see that one, it still has carpet. It still got that old vibe. Not modern kitchen. Not modern bathrooms. This is all carpet rooms. Bedroom floors need to be refinished. I would just replace all the flooring and all the paint, to be honest with you. So for this property, let's see what neighborhood this is in. And I like to just look at the map here on this website. Let me show you really quick by what I mean there. I usually like to just click on a map, and if there is an area that's a little bit more detailed, meaning if I zoom out and I can see that this is closest to Avalon Park, I'm going to write Avalon Park. Avalon Park. And this is needs okay condition, but full cosmetic rehab from outdated kitchens and bathrooms, and needs to have full LVP and paint job. So now I know, hey, what is this property being listed at? Now, the crazy part is that this property is being listed for 209,900, and I just saw this other property, but this is in Bessemer, so actually a little bit different, but different zip code, for 189. Let me see where this property at. See how far is this address? 214. Almost the circle. 4-minute drive. For less than 1.5 miles, I would assume that's a pretty good comp, but you can kind of see that you're not getting rewarded a premium for going over 1,600 square feet, right? Because you look at this home, it's being listed for 190, and it was almost really, it's a lot bigger. I mean, okay, I mean, they might be similar condition too, and that's the crazy part. So you got to pay really close attention to what is selling and what's being sold for in this market. And this was the other comp that we probably just looked at not that long ago. This is still active. So I see this is still active for 189. I'm really going to question, why would this property sell when it was 210, unless there's that big of a difference from 1.5 miles from this area to this area. Now you have a natural barrier right here between this little creek right here. Maybe that could be the difference, but that's not even the situation here. I mean, this is before you even cross the creek, but this property is closer to a main street. So again, a lot of factors, right, that you got to take into account. Again, this is an art, not a science. This is not investment advice, but this is why you got to get confidence in what you're doing. Because if you're wrong on the ARV, this is a delta, a difference of almost $16 a square foot. That could be the difference between you getting back out all your capital and you getting none of your capital back out. So just be really, really careful when you're doing your comps. Now, for the purpose of today, since I'm not analyzing a BRRRR, I'm analyzing this property as is. I'm just going to keep it in my back pocket. But if I get another property that's in the zip code, I'm going to be looking really closely at this property and seeing what's being sold, right? Because this is pretty similar in terms of your built. Now, is this a lot bigger in terms of lot size? Yeah, but again, you gotta think this really clear, right? I would prioritize bed, bath, square footage before I get to the acreage. Obviously, the lot size definitely matters, but it just varies by every market. So again, what is the perfect comp? I mean, the perfect comp would be if 212 Mimosa Circle looks exactly like 214 Mimosa Circle, and it had the similar view, similar facade, similar conditions, right? Like if this was the same square footage, then this home, if it's sold, would be the perfect comp for this property, right? Because this is a carport, maybe it looks similar or the same. I mean, these are all factors that's going to matter when it comes to your ARV, okay? Now, for the purpose of today's exercise, I'm just going to go ahead and analyze this deal, assuming I'm buying this property on the market. So bear with me while I set up a new property. Excel spreadsheet, 130, 209, 900 is the listing price. Let me see what our property tax estimates are. 95 for property taxes. 95, a little bit lower than what you typically see in Birmingham, but our insurance is a lot more, so it goes 163 times 1.2. I'm multiplying the 163 homeowner insurance estimate by 1.2 because I'm assuming the premium for an investment property is going to be more, okay? Now, I got 1152 for not the rent, it's the old rent, so I'm going to go to affordablehousing.com, go to the owner section, go to the market rent estimator, plug in the address, plug in a bedroom count, and I'm going to have 1457, okay? 1457, and that's going to get us to 3.32. That's for 25 units within a 3.3 mile radius. Okay, not bad. I've been seeing 4-bedroom rents above 1,400, so I can take that number as is for now. I got 10% set aside for maintenance. I got 10% set aside for property management. I got 5% for vacancy. And you know me, if you see any of the lives, this is where I harp on. I always want you to make sure that you're setting aside money every single month for maintenance, because guess what? This money doesn't belong to you. You know that the roof is going to get replaced in 5, 10, 15 years. It just depends on how old it is. You know that water heater is going to get replaced in 5, 10, 15 years. You know that air conditioner is going to get replaced in 5, 10, 15 years. You got to set aside money now, because otherwise you're going to be in a really, really bad shape thinking you made all this extra money only to get a big bill at some point. Don't be that person. Get everything fixed up front and then get it all ready, okay? Now, let's go ahead and go to gross rent, 1457. Our cash flow per month is negative 272 per month. Our cash and cash return is negative 2.4. That was assuming a 25% down on this property. Let's do 20% down. So if I do 20% down and my finance amount in K6 is equals to my B4 minus my down payment in 19, I'm going to be financing 168 grand roughly at 7.25%. That's a negative 3.34% return, negative 3.3. That's a negative 343 cash and cash return, assuming I bought this property for 209,900 with a rehab of roughly, let's change to rehab. Let's see. I'm assuming the air conditioner units are fine because someone's living there right now. I am definitely going to replace all of the painting and flooring, so I won't put along the square footage right here. 1579, 1579, 1579. This covers my paint job in row 86 and at 1579 square feet in LVP. I do not have to replace the kitchen. I am going to assume I'm going to replace 2 of the bathroom renovations entirely because they were all old. I'm probably going to repaint the cabinet at least for the kitchen. What else I got? Got $500 for the landscaping, just keep it tidy while getting rent ready. And then finally, I got $1,500 for the roof, just to kind of keep that all ready. And that's a $44,000 rehab. Again, negative 4%. So slightly different in terms of my cash and cash return, but my cash flow per month is the same because I did not borrow money to fund that rehab. All right, let's just make a $44,200 rehab. So the only thing I would say is, well, what would quote unquote make this a deal? Again, not investment wise. I'm not still saying any investment in the call. If I go to lower this property for 100 grand, that's only still 4% return. That's probably because of how heavy the rehab is. I probably buy this property for 50 grand in order to get a 10 point. Let's do 55. There you go. I can buy this property for 55 grand to be a deal, but there's no way this property is going to go for it, right? Because, and really, you can kind of start seeing, right? Really, if you're buying a property, you don't really want to be all in on your cash over like 60 grand if you're buying it traditionally on a market. And that's what you come to realize. And that's how you quickly understand whether or not something is a deal, quote unquote, just by quickly looking at numbers. I knew right away once I saw that this property was 200 grand and I saw that the average market rent was 1457, I knew this wasn't going to be a deal. And I could have just stopped analyzing the deal right then and there, but I didn't. And the reason why I didn't is because I just want to walk through this number and this scenario with you, but for you to get a sense of what it actually takes, right? Because how do you avoid burnout? Burnout comes from doing a ton of work for no results. And if you could put in the reps and you understand your market and you stay on top of your market, meaning you're staying on top of not only sold properties, but also the price per square foot, that's how you build up the market knowledge. Step by step. There's no fast way around it. I mean, you can probably look at some data and you can probably rely on a realtor's opinion, but at the end of the day, you're accountable for your own decision. That's why everybody's strategy is different, right? We talked about 10% cash and cash return today because that's just a good, fair number to target, because why would you buy a property that was only yielding 10%, 4% cash on cash, when you can go buy a treasury bond for 4% with no execution risk, right? Execution risk is like, hey, when you're doing this 40 grand rehab, is the contractor going to show up on time? Are they going to kill you on change orders? Are they going to cause more problems for you than not? And I honestly don't know. That's why it's execution risk. Just because they were a good contractor before doesn't mean that they're going to perform again in the future, right? Past performance is not indicative of anything in the future. However, you can mitigate that risk. You can get check referrals. You can protect yourself by getting a max price guarantee, which not a lot of contractors will offer. You can try to incentivize the contractor to finish on time, but you're not going to be able to mitigate all the risk. So just understand there's some risks that you just cannot eliminate. And that's why you have to be careful. And that's why you really got to do your diligence. All right. And no one's going to understand your personal goals and your portfolio strategy better than your own investment advisors or yourself. So understand what you have tolerance for, what you can support. Because what if you really do go through a bad case scenario and you're losing $300 a month? Can you support that? Right? Think about that. Think that through. And I hope this was helpful, everybody. I hope you guys are able to copy my homework, analyze the CAO analyze today. If you guys have any questions, you guys want to copy the spreadsheet, go to affordablehousing.io, go to the Get Deal Analysis tool, put in your name, email, and phone number. I'm not going to spam you. I might send you some emails every once in a while, but that's the fastest for you to get a copy of the spreadsheet. And once you get a copy of the spreadsheet, I can copy my homework sincerely. I didn't make the spreadsheet from scratch. I got it from a few other folks. I modified it, I tweaked it. And this was very helpful for me to just understand roughly whether or not I want to spend any more time on it, right? Do I want to spend someone to go out there and get photos for me? Do I want to pay a contractor to go out there and give me a bid on a property, right? Because that might cost you $300 or $350 just to go out there and get a bid, right? It's costing time to go out there and give you a bid. So be really careful. And I hope this is helpful, all right? Hope you all have an amazing Halloween tomorrow with your family and friends. And I'll see you all tomorrow for day 396. Have a good one, everybody, and happy Halloween.